Hello students of grade 10. My name is Ms. Neja Bamfield and welcome to another session of Office Administration. Today we will be focused on stock records. Our objectives are to identify the methods of stock control, to explain the importance of stock control, and to identify stock control, its advantages and disadvantages. Let us begin. What is stock control? The factors or process of ensuring that appropriate amounts of stock are maintained by a business so as to be able to meet customer demands without delay while keeping the costs associated with holding stock to a minimum. Methods of stock control. Controlling stock is essential to a business success. Overstocking can result in insufficient liquidity, whilst understocking can make it impossible to satisfy your customers' demands. Stock is how your business makes money and stay afloat. So to ignore keeping it under control can mean serious consequences. Stock reviews. Taking regular stock reviews to establish whether new stock must be ordered is essential. This considers predetermined figures that help businesses leaders make the decision to order new stock or hold off. Many businesses operate a minimum stock level. The lowest point stock can go before more is ordered. Fixed time or fixed level reordering. This involves ordering new stock either at fixed times, fixed levels, or both. Example, a company may have a standing order for 500 units every third Sunday of the month. This type of stock control is particularly useful for companies with fixed contracts and stable demands, with sporadic, irregular orders unless they are placed with a long-term delivery date. Just in time, or JIT. This stock control system originated in Japan. As the name suggests, stock is ordered as and when it is required to keep costs down and liquidity high. However, the increased cash flow comes at a cost. The company must be exceptionally organized in order to ensure orders are made at the right time, and suppliers must be reliable to fulfill requirements. Batch control. Batch control separates stock management and production into batches. This reduces complexity in the production process and helps make sure short-term targets are met. Batch control can also help keep costs down as firms only need the raw materials and components needed to satisfy the demands of the individual batch. The economic order quantity, or EOQ. The EOQ is a complex mathematical formula that aims to keep stock at an optimal level, depending on the type of firm and the industry it operates within. The EOQ calculations can be time-consuming, so you may find it easier to consult a professional or invest in stock management software, which should be able to make out-the-box EOQ calculations. EOQ can be combined with other forms of stock management where required. First in, first out. This system is popular with businesses that work with perishable stock. It aims to ensure that stock does not deteriorate before use. Stock is identified when it was received and moves into the next stage of production before stock received at a later date. Now let us turn our attention to the importance of stock control. Importance of stock control. 1. Prevention of pilferage. 2. Control of inventory. 3. Signaling of market trends. 4. Monitoring availability of capital. And 5, monitoring of storage space. What issues does stock control help to resolve? Stock management software provides forecasts and trends such as seasonality to ensure a stock out doesn't happen. A stock management system will ensure that there is an appropriate level of stock for all situations. The purpose of stock control is to also reduce the cost of holding stock while ensuring you can meet customer demand and making sure that there's enough material for production. Overstocking. The opposite of stock out is overstocking. And while it may seem like having a high level of stock at all times is a solution, it comes with its own issues. The excess stock becomes tied up in the business's capital, which could have been used in other places. Excess stock also incurs additional warehousing costs due to spacing. And in some instances, the stock becomes outdated or spoilt before you can even get the chance to sell them. Removes the need for guesswork. Stock control gets rid of the guesswork in forecasting and allows for much more accurate data when setting figures. This means that the sales and marketing departments can set realistic forecasts and purchasing can order stock based on real historical data. It helps with returns management. Having control over stock will help to create a clear process for when stock is returned or damaged and will prevent the wrong stock being sent out to customers. A stock management system will help the warehouse team to correctly process the products back into the warehouse in the correct locations so that stock doesn't end up in return bins and never reissue to be sold. It prevents theft and missing stock. When all stock is accounted for and organized with correct barcodes or in the right bin location, it becomes a deterrent for potential theft and it becomes harder to misplace or lose stock. A good business software will give clear visibility of the whereabouts and status of all your products. Thus, errors or misplaced products will be identified easily. It's impossible to have complete, accurate stock control if relying on manually updating spreadsheets. Human error and long, time-consuming processes increases the likelihood of inaccurate information reporting. If expanding the product lines, a connected, reliable stock management to support and automate processes for maximum efficiency is recommended. Question. Stock types are considered raw materials, unfinished, finished goods, and consumables. True or false? If you indicated true, then you are correct. This is why raw materials are known as components used to create new products. Unfinished goods are materials that are in process of being converted to products. Finished goods are products ready for entry into the market. And consumables are additional resources used in the production process, for example, fuels and gas canisters. Benefits of stock control. Stock control enhances productivity and efficiency. Wholesale distributors can radically improve their productivity and efficiency in their warehouse when they implement stock management software. Software will eliminate any time-consuming manual processes, freeing up time for employees to focus on other areas of business. Stock control organizes the warehouse. A disorganized warehouse creates hundreds of problems. Staying on top of inventory is just one of them. Having a clear stock management strategy in place, organizing and managing the warehouse becomes much easier. From placing best-selling products together to arranging the warehouse by brand or seasonality, repositioning the stock becomes easily accessible. This means employees can find products quickly, complete the order fulfillment process in a timely manner, and in turn keep customers happy. Stock control helps customers to come back for more. If customers know that products are always available and they'll get their orders fulfilled in good time, they're likely to return. To remain competitive and have an edge, meet customers' demand in the most efficient manner possible. And this is where stock management comes in best. The business will have the tools for complete control over your product levels and the power to place a purchase order for restocking in order to maximize efficiency and sales. Stock control helps to sell products with ease using multiple channels. If the business is selling products across multiple channels, such as Amazon, eBay, or over the phone or in store, staying on top of and tracking these orders from all channels manually can become a minefield. With fully integrated software, stock control will be managed from each channel so that stock levels are kept up to date and customers are kept happy. Stock control helps in running out of stock. For a company to successfully do business, they must have the products, materials, and/or services that the customers needs. Running out of stock, also known as stock out, happens when the product, materials, or service is not available to meet customers' demand, and usually happens when demand is higher than usual. Running out of stock not only damages the reputation of a business, it can create large financial losses due to the lack of sales. Question: the main objectives of stock control is to said, if your business deals with physical products, you need stock to be able to sell and turn over. That is correct. If you indicated to make sure the business also have enough stock for its customers, that is also correct. And if you said to limit the amount to be spent on storing and buying stock, that is also correct. Note: inventory or stock control is to maintain inventory levels so that the total cost of holding stock is minimized. Customers always get what they desire and to turn over as fast as possible all stocks. Students, we have come to the end of today's lesson on stock control. Thank you for having me. My name is Ms. Nisha Bamfield.